Hi everyone, today I will take a brief look at Bitcoin and Ether, which might sound surprising as we are mostly focused on commodities, the stock market or the macro in general. However, I will show you why the data on SpreadCharts can be incredibly helpful to you even if you don't trade futures at all and are focused on trading on those cringy, unregulated crypto exchanges. So stay focused. Before I move on, I have to remind you that this video is not investment advice. And if I'm gonna speak about specific financial instruments like futures, spreads, ETFs, currencies or cryptocurrencies, it is always just for educational purposes. First of all, I will not talk about the broad market like stocks or currencies because I did so 10 days ago in this video analysis where I told you that I expect S&P 500 to go up in the short term to roughly 5,300 points. We are already above that level somewhat, but once again, that was just a rough area, not a precise level. But I also told you that I expect that the market will correct soon after, and I still think that is true. I still think the equities will roll over and move down in the short term. I think there is still more upside in the medium term, that the uptrend will continue, but in the short term, I still think there will be a correction. With that in mind, let's focus on cryptocurrencies from now on. I will start with this chart that I think is the most important right now. It compares the price of Euro, Bitcoin, and Ether, or the futures on these markets to be precise. And you can notice one important thing, that is Euro broke above its falling trend line 3 days before Ether and Bitcoin. So it's been leading cryptocurrencies in this case. And that's the reason why I will pay close attention to the Euro in the coming days, because I still expect this breakout to be false. And why is that so? Well, let's take a look at these two charts. The first one shows SOFR future spreads. SOFR futures are futures on interest rates. Specifically, the spread is between different duration, between the 1 month and 3 month SOFR futures. I won't delve into details because I explained this a few times in our quarterly macro outlooks. But the point is, as you can clearly see, there is a positive correlation between these spreads and the dollar. And you can also notice that while the value of the dollar measured by the dollar index is still below the low from the beginning of May, these spreads have recovered above that low. Both these expirations, both September and December expirations. And I think this is a bullish divergence and a bullish short-term signal for the dollar. The second important chart is here, and it compares the price of Euro to the inverse price of European natural gas and inverse price of European emission allowances. Why is it important? Well, there's a clear relationship between the energy prices in Europe and its currency. I explained that last time. And the recent development is that Euro pushed higher. It's been very strong over the past week, while the price of nat gas and emission allowances continued to move higher, which means that these two curves move down. So there's a clear divergence, and I think that will put Euro under pressure. So What do I expect? Well, I will close these two subcharts and focus just on the euro. I think this breakout on euro will turn out to be false and we will get a correction in euro. But keep in mind that I am medium-term bullish on euro. So when I zoom out, I still think that this multi-month consolidation will be resolved by a powerful break higher, mostly because of the positioning. This is something I explained last time. However, my base case scenario is that there will be one more drop in the very short term, in the coming few weeks. And I still think that won't be anything dramatic, but I look forward an undercut of this previous low. So my base case is that the price will drop below the low from April, but will stay above the low from October. So the most obvious target is the area between 1.055 and 1.06. Keep in mind, this is Euro futures, so the prices here are somewhat higher compared to spot currency exchange pair. But that's the point. I expect the correction, but nothing serious. But still, even such a correction will be surprising for most traders, because there is currently wild optimism, not just about euro but also the stock market, current cryptocurrencies and so on. So even such a relatively normal correction would be very unpleasant for the majority of people. Maybe we can even draw such a trend line and speculate whether the price will retest this trend line. That's well possible. If you believe in these trend lines, then maybe it can help you, but I don't think that's it's that important. For me, it is important that the price will undercut the previous low, so that some kind of panic will happen in the euro or the market in general. But let's get back to cryptocurrencies. I will open these two charts that are very helpful for cryptocurrency traders. They show positioning data in Bitcoin and Ether futures. And even if you don't trade futures at all and are solely trading Bitcoin or Ether on those cringy, unregulated crypto exchanges, that these data can still be very helpful to you, because it's a great sentiment indicator that cannot be manipulated, because it shows positioning. The market participants are obliged to report that positioning, and that's why I think it's so valuable. Let's get to the point. Before I move to the lower chart, I have to remind you that this is not the data for the large Bitcoin futures contract, the BTC contract, but for the micro Bitcoin contract. The reason is that there is much more participants trading in this micro Bitcoin futures, and therefore the sentiment data is more relevant in my opinion. And we also are not looking at the net positioning, but the net traders indicator, which once again I consider to be more relevant in case of cryptocurrency futures. And maybe I will switch from net traders into net traders index in this case, because the open interest can change a lot over time in these markets. So the COT traders index might be a better way to go in this case. And if I'm correct and the breakout on euro will turn out to be false, then it is very likely that both these breakouts on Bitcoin and Ether will be false too. Yes, I mean, that's not, or at least it looks like that's very unlikely given the strength of the uptrend and the length of the recent consolidation, and also the strength of the breakout in both Bitcoin and Ether. So you are correct if you think I'm crazy, but I'm just looking at the data and thinking about the potential scenarios, and this scenario would be quite surprising and maybe even unpleasant for the majority of traders. So if you disagree with me, fine, but at least consider this scenario and how it would impact you personally if it turns out to be correct. So let's get back to the commitments of traders data. I think that if the price really rolls over and move down, this chart can be really helpful at timing the bottom, because my target for the downside would be around 0.2 in case of the COT Traders Index. Why is that so? Well, I don't expect a sell-off into the negative territory like we saw in 2022, because back then Bitcoin was in a bear market. That's no longer true. We are in a strong bull market. And I think this area around 0.2 corresponds to the most likely level where the market would become sufficiently oversold and the sentiment sufficiently bearish, but yet still compatible with the overall uptrend. So the damage to the price would not be so bad to invalidate the recent uptrend. So that's how I see it. And in terms of price, I think, once again, I don't know. That's the reason I will use the commitments of traders data. But the most likely target under such a scenario would be probably somewhere slightly above $50,000, maybe corresponding to this consolidation from February. So that is the most likely level of support, somewhere between $50,000 and $52,000. And keep in mind that the commitments of traders data is published with some delay. It's data from Tuesday that is released on Friday. So given the volatility in Bitcoin and especially Ether, it is well possible that the market will turn around and push sharply higher before we get a confirmation from the COT data on Friday. So you must always somewhat anticipate or expect where the commitments of traders data might be. For example, if you see the data from last week and the price is significantly lower compared to the same price from a week ago, then it is very likely that the COT index is also lower. So that's the way I use it for a very precise timing. And now let's switch to Ether. Here it looks very similar. Once again, I will switch to the net traders index. And my target on this COT index is the same. It's at 0.2. But of course, the current value is much higher compared to Bitcoin, which means that there would be much more downside compared to Bitcoin, which is only natural. It is a much smaller market, much more volatile, and therefore the downside would be simply bigger. What price would that correspond to? Well, that's very hard to say, because given its greater volatility, greater unpredictability, it's really hard to give you some targets. Although I'm just making this up, I have no idea what price the Bitcoin or Ether will reach. But maybe the consolidation area around here would be a great downside target. So the price around 2,300, that would be great. But maybe I'm just too pessimistic. Maybe it will be higher, it will be lower. Maybe it will be just somewhere below 2,600. I don't know, but that's the reason why I will stay focused on the commitments of traders data, because it is much more helpful in this case. So if the COT index gets close to 0.2 or it looks likely the reported data, or once the data is reported that the index will be close to 0.2, then that would be a great area to go long Ether. Of course, not considering the fundamentals, if there are any fundamentals in cryptocurrencies, because I think this is all just speculation, but I'm not considering other factors. But that's the way I would use this data for timing the bottom in Ether or Bitcoin. So Ether would be affected much more than Bitcoin if we get a correction, but this is only in the short term, because in the medium term, Ether will most likely outperform Bitcoin if the current rally continues in the medium term, which I expect it will. And this is where this ratio analysis between Ether and Bitcoin futures is very helpful, because you can see, especially on the ratio, that we are approaching the left tail of this 3-year distribution. So this left tail acts as a natural support, which does not rule out another probe of the left tail that would correspond to the correction on Ether and Bitcoin. But after then, I expect that we will test the right tail and maybe even break out above this distribution altogether and move to some higher level. Of course, there are many factors to consider. The number one reason why the Ether recently outperformed Bitcoin, this breakout was much more powerful on Ether, is because of the ETF approval rumors. Specifically that the SEC will approve the Ether ETF soon. But once again, these are just rumors, and maybe they are true, maybe they are wrong, I really don't know. But my point is, Ether acts as or has a positive beta to Bitcoin, and if the price of Bitcoin goes down, the price of Ether will most likely go down even more. But at some point during this bull market, if it is sustained, I expect Ether to start outperforming Bitcoin given the intermarket ratio analysis you can see here. But once again, you must differentiate between different time horizons. And the last chart I will show you is this one for Bitcoin funding rates, or to be honest, it is contango on Bitcoin futures, but that roughly corresponds to funding rates on Bitcoin. And I told you last time that if we get a correction on Bitcoin, that the ideal target for this curve is at roughly 1.0. It's not a precise level, but roughly 1.0. And I still think that's true. So if I'm correct and this breakout will turn out to be fall and the price will roll over, then I will look forward to this curve to drop to roughly 1.0. So that's another incredibly helpful piece of information that can help you time the bottom on Bitcoin. You have the relationship between the euro and Bitcoin or Ether, which means that the euro can help you, which is one thing. Then you have the commitments of traders' data, which with some delay can incredibly help you in distinguishing between the oversold or overbought conditions in cryptocurrencies. And finally, you have the Bitcoin funding rates measured by the contango in Bitcoin futures that can also help you to spot the bottom in price. A good thing about this indicator is that it is published with little delay compared to COT data. Specifically, you have the data next day because we are using the settlement prices, of course. So this is something that can really help you estimate the conditions in Bitcoin nearly in real time or only with 1 day delay. Before I conclude this analysis, I must tell you that this is not an advice, and I'm not recommending anything to anybody, but I just think if you are trading cryptocurrencies, it would be very unwise to try shorting them, because once again, they are in a clear long-term uptrend. We are after a lengthy consolidation, so there is a good chance I'm wrong. And if I'm wrong, the price of Bitcoin will move above $90,000 in a short period of time, and that could be brutal for shorts. So I would not short Bitcoin or Ether under any circumstances in this market regime. Personally, I do not trade them, but I made the changes in positioning that I told you about last time. So I got rid of the long euro position entirely. So I moved back into dollars or T-bills specifically. So that's the way I'm gonna play that, and that I think is the best way to play that, or the most conservative way, because as I told you, I expect the euro to roll over and drop below the recent low. That would push the dollar higher. So that's the way I'm playing this. And once again, I'm not recommending anything to anybody, but considering the risk reward and the other factors, I think that's the best way to do that. And that's finally all for today. Thank you for watching us, and see you next time.